What's going on, everybody? Welcome to Legacy Horizon, where families go from survival mode to legacy mode. I'm Eric Dorsey, and if you're new here, this channel is built for working class families and those who are done surviving and are ready to start building. In today's video, we're covering everything you actually need to know about protecting your family's financial future. Let's get into it. Nobody sat us down and told us the truth about money. Not in school, not at home, nowhere. And because of that, most working class families are one bad month away from starting over. Not because they didn't work hard, but because nobody taught them how to protect what they earn. And I'm changing that right here, today. So in the next 20 minutes, I'm going to teach you everything you actually need to know about building and protecting your family's financial future. The 5 pillars, the mistakes, the math, the moves, all of it. So stay with me. For years, I've told myself I'd start when I was ready. When I made more money, when things settled down, when I actually understood things, I had a plan, but I didn't have protection. Then something unforeseen happened. A few years ago, my grandmother passed away. She was a sweet woman who could light up any room she walked into. She passed away on Mother's Day. I had just left the base to go visit my mom. And when we got the call, on a day that was supposed to be about a celebration, turned into a complete nightmare. What made it even harder was watching everything my grandparents had built together just start falling apart. They lost real estate property and I had to watch my grandfather just struggle to find his footing once she was gone. And I sat there realizing if it had been me, my family would have nothing. Not because I didn't care, not because I didn't work hard, but because I kept waiting for a sign that never came on its own. That was the week I stopped waiting. And in this video, I'm going to give you everything I wish someone had given me during that week. The 5 financial pillars. I've heard many people reference the topic of financial pillars, but I never truly understood it until I picked up 2 books, Rich Dad, Poor Dad, and Lords of Easy Money. These books help me understand the pillars of personal finance, principles that every individual should be taught and live by. But life sometimes has a way of pulling us off course. So let's talk about it. Emergency funds. Pillar 1, emergency fund, which every single person should have. It shouldn't have a basic balance. Not $500, not $1,000 stuffed away in a drawer. There should be 3 to 6 months of your actual living expenses. Rent, utilities, groceries, everything sitting in a high yield savings account, untouched. Here's why this one comes first. Without it, every financial decision you make is made out of fear. Your car breaks down, you go into debt, you lose a client, you miss rent. Just one bad month wipes everything you've ever built. The emergency fund is not a luxury. It's a foundation. Nothing else works without it. So here's how to build it from zero. Start with a basic target of $1,000. Just $1,000. That's just your first wall. Then you can start building up to 25, 50, 100. $100 a month into a separate account you do not touch. High yield savings accounts are paying real interest right now. Your money grows while it just sits there. Don't wait until you can afford to save. Decide you can't afford to wait. Life insurance. Pillar 2, life insurance. If you have people who depend on your income, a partner, a child, aging parents, and you don't have life insurance, I need you to hear this clearly. This is a crisis waiting to happen. I'm not trying to scare you. I don't want to get you to buy anything. I'm trying to make sure you never have to watch your family figure out how they're going to survive without you while they grieve. A term life insurance is not expensive. A healthy adult in their 30s can go get a 20-year, $500,000 policy for $30 to $50 a month. That's less than what most people spend on streaming services. The math is simple. You pay a small amount every month so that if the worst case happens, your family doesn't have to lose their house. They don't fall behind on bills. They don't have to start over from zero. No dependents yet? You can still lock in a good rate while you're young and healthy. Rates go up as you get older. So get it now. Will and estate planning. Pillar 2, a will. This one, most people skip or just don't know about. And it's one that can cause the most damage. If you have children and no will, the state decides what happens to them and your assets. That's not trying to be dramatic. That's literally the law. A judge who has never met your family decide who raises your kids if something was to happen to you or both you and your partner. A basic will is not expensive. Online legal services make it accessible for under $100. An estate attorney does it properly for a few $100s or more. Either way, it's one of the most important documents you will ever sign. Beyond a will, name your beneficiaries on every account: bank accounts, life insurance policy, retirement accounts. If your beneficiary are not out of date or missing, your money goes to probate. A long and expensive legal process that can tie up your assets for months, cost your family thousands of dollars. Do this today, not when things slow down, today. Investing. Pillar 4, investing. Hear me clearly. It's not timing the market. It's not crypto tips. It's not get rich quick schemes. It's boring, consistent, long-term investing. Here's the number that can change how you think. If you had $200 a month starting at 25, by the age of 65, you would have roughly $525,000. If you decided to wait additional 10 years and start at 35 with the same amount, you end up with $226,000. You didn't lose $200 a month. You lost $300,000. That is the price of waiting until you felt ready. Starting with what you have, $25 a month is nothing. It's a habit. And habits compound just like interest. So go open a Roth IRA if you qualify. Max out your employer 401k. That's free money sitting there. Just why are you leaving it on the table? Then go look at index funds. Low cost, diversify, set it up, and forget about it. You don't need to understand everything before you start. You need to start before you understand everything. financial literacy. Pillar 5. Financial literacy is one that changes generations. Not just learning this, you need to teach your kids this. You having money conversations at dinner that nobody had with you, you're breaking the cycle of financial silence that keeps families stuck for decades. Financial literacy is not a one-time lesson. It is a practice. It's asking questions. It's catching up on reading. It's watching about it. It's listening about it. And then taking what you've learned and making one decision that betters you every year. When your child sees you checking your account and budgeting and investing, they absorb it. When you talk openly about money and about mistakes and about what you're building and why, you hand them the tools that no school will ever give them. Pillar 5 is one that keeps on giving long after you are gone. The biggest mistakes. The number one mistake is spending before protecting it. Now I want to talk about the mistake that quietly destroys most families' financial progress. And it's not what you think. It's not spending too much. It's not debt. It's not skipping savings accounts. The number one financial mistake working class families make is spending money before protecting it. Every single month. Here's how it works. You get paid, you pay your bills, and you might spend whatever you earn on the little things. And then what's left over, you might save it, but that equation's backwards. You need to earn, you need to protect, and then spend in that order. Protect means fund the emergency account first. Pay your insurance premiums. Move money into investing accounts before your lifestyle spending even touches it. Automate it so it never sits in your checking account long enough for you to get to spend it. Families who build lasting wealth don't just earn well. They protect what they earn before they even spend it. The waiting mistake. The second mistake I see consistently is waiting. I'll start when I make more money. I'll get insurance when everything just starts to settle down. I'll look into investing when I actually understand it. Here's what nobody tells you. Ready is not a financial state. Ready is a feeling, and feelings do not build wealth. If you're not protecting your income right now, you're one bad month of starting over. Not because you're irresponsible, but because you're waiting for a sign that will never come. The waiting is a price. You don't see the bill until later. Imperfect actions today beats perfect planning forever. You don't need to have it figured out. You need to begin. Before I wrap everything up, I want to give you one thing you can do today, right now, before this video ends. Open your bank app, search your transaction history for recurring charges. Find one subscription you forgot about or don't use anymore, or rarely use, and cancel it today. No more next. $15 a month is $180 a year. Invested consistently over 10 years, that's nearly $2,700 from one subscription you weren't even using. Just small moves done consistently can change everything. That's where this starts. Not with a massive plan, not when you finally figured it out, with one decision made today that tells your money who's in charge. So that's everything for today's video. If you made it this far, you're ready to take this more seriously than most people ever will. Now, I want to hear from you. Drop down into the comments, and I want you to tell me what's one thing from this video you're getting or you're going to act on, not think about. I want you to act on it. I read every comment. And I want you to know that I'm proud of you starting now. This channel is giving you everything that nobody gave you before. Hit subscribe. Every week I come back here with the next lesson or new information with no fluff, no filter, just a real conversation about money. Protection, legacy that works for the working class family. We're building something here. Legacy Horizon, from survival mode to legacy mode. I'll see you next time.